I got a funny feeling. I got a funny feeling.
How's it going, fam? Mauricio with you guys again, and I've been getting a lot of questions as far as how do you know the direction of the RSI? And here we have somebody that went ahead and asked us that question, as many as other people have asked us. So I'm gonna go ahead and get straight to it. Also, I'm glad that many people are winning with the free Telegram that I had sent out, which is the first link down below. If you have not joined, I suggest you join so that way you can go ahead and get profits like this guy over here. Now, when it goes to that, I want you guys to understand that when it comes to the RSI settings, I'm not going to go ahead and talk about these just yet, but I will talk about them in the future. But for now, I want to go ahead and simplify as far as how it is that you can identify, kind of the direction that you can be taking. Now, you have to understand what time frame you're looking so that we can know where it is that you're trading, right? Because I can look at the 1 hour time frame and look for divergence. And, we're already spotting divergence in this area. Now, for those that don't know what divergence is when you see the market going one way, but yet again, you see our RSI going the other direction, right? Either the other direction or flat. In this case, we are currently flat, so therefore, this is considered as a potential divergence. Now, when it comes to this scenario, when do you know that the market's actually going to start falling? I've heard about this question many times as far as, hey, okay, I get the divergence, I understand what's happening, and I know it has to fall, but when does it fall? Here it is. So understand that there's certain things that you want to take in consideration as far as, price action, wicks. What is the market doing for you? You can identify that the market right here is leaving some wicks, okay? Now, when you start identifying that the market is leaving you wicks like it is right here, that's telling you something. Those wicks are telling you that the market is exhausted, just trying to potentially have a reversal. Now, understand that those wicks, you typically want to have them in certain areas in the market that have been resisted in the past, or those are at the very, very top of the market. And so far, you can see like right here. Okay, if I was to go ahead and put a horizontal ray from here to here, we can see that the market has not really passed that area for quite a while. And we're starting to identify that market within that area. You can see right above, right where this horizontal ray is at, it starts having that exhaustion. It starts telling us, hey, the market can't go as high as anymore. Now, when the market went ahead and went higher, this right here is what tells me, hey, Mauricio, look at what the market is doing and figure out if this is within your time zones. Now, me, typically, I like to trade on New York sessions or London session, one or the other. I don't typically like to trade Sydney session and all these other, Asia session, cross sessions. I don't like to trade them because what I'm trading right now specifically are major pairs, anything that involves the dollar. So you can see the euro dollar in this case, I want to be trading this either on the London session or on the New York session when those banks are open in those areas. So now that I found out, okay, this right here, we are in the London session. You can see right beneath over here, okay, it says 2 a.m. Okay, so it says 2 o'clock, and then we keep scrolling over. We're gonna be able to see that over here we are in our New York session. Now, in that New York session, we start identifying that the market is tending to have some price action, some exhaustion. Market can't continue going up. So this is when we start going to lower time frame, especially because we had divergence down over here. Okay, now that we have divergence and we have spotted areas, I always like to box my zones in so that way I know where I'm looking. And I typically like to go to the 1 hour time frame and then the 15-minute time frame, so on and so on. Now, on the 15-minute time frame, I can also identify that market is also giving me more divergence. Market's going down, market's going up. And specifically, I am seeing that's trading me very, very heavy divergence right where I want to start trading. So you can see market going up right here, and you can see that market is going down right here. Now, on top of that, you guys can see in this area we are oversold. So I already have divergence from the bigger time frames. So understand that whatever the bigger time frame is doing, the smaller time frame must do as well. Because I want you guys to know this: the minutes create the hours create the days creates the weeks, and the weeks will eventually create the months and the years. So when it comes to this scenario, you always want to have the small time frame doing the movement before the bigger time frame does it. And that's how you're able to obtain these wick entries like over here and also certain trades over here. Now, when it came to this scenario, I was able to identify that the market was oversold. We had divergence. And yes, perhaps we didn't get this main move right here, but no worries. We didn't catch it, but yet we know that the market is going to reverse. And why is that? When we start going to Wyckoff schematics, this right here, we are in a full-on distribution schematic. This whole box that I went ahead and lined up, it's a distribution schematic. Now, what is a distribution schematic? Let me go ahead and show you guys what a distribution schematic is. So when you go to a distribution schematic on YouTube, on Google, you will be able to find what a distribution looks like. So there's two different phases. One phase is going to be, let me go ahead and see. One phase is going to be a distribution schematic with a upthrust, and the other one is going to be with the upthrust after distribution. So let's see if we can actually find some of these images. I don't know why it's taking me struggling right now. Okay, so now that we're over here in the distribution, I'm gonna go ahead and put Wyckoff logic so we can go ahead and go straight to it. Now right here, this is a distribution schematic. Okay, now understand that if you don't know what's going on right here, don't worry. You know, throughout the sessions and the videos I'll be doing on YouTube, I'll be explaining partially what each thing means. But we can actually see a buyer's climax. Buyer's climax is at the very top of the market when the market is already tired. Market has an automatic reaction, which we can see market falls out very fast. Secondary test, show of weakness, upthrust. Okay, this right here, this upthrust right here is what we are seeing over here, upthrust. Okay, that is what we are seeing right there. Now, over here we have our test, which our test is going to be this area, the last point of supply. Okay, this is the area where we're already at, and this is where we're able to enter on that trading zone that I went ahead and sent out to the free Telegram, which is the first link down below. Now, when it comes to that scenario, I'm already seeing what market's doing. Okay, so divergence helps me identify the movement before it happens, but it also confirms me where the market can come back and test once you understand what a point of interest is. For example, this right here is a point of interest. What I'm going to go ahead and box right now is a point of interest, and that is why I was able to identify my trading zone, which was right here, that I sent out to every single one of you guys in the Telegram, which again, it's the first link down below. Okay, so now when it comes to that scenario, we were able to identify our overall scenario when it comes to that trade position that we're looking at. And as you guys can see, we were to go ahead and enter from that zone, stop loss right above those areas, and it led us to a 5-to-1 risk reward. Now, sorry, this one led us to a 3-to-1 risk reward, and you were able to maximize it all the way to a 5-to-1 risk reward, which is a phenomenal risk reward, and I hope you guys were able to take advantage of it. Now, second scenario over here, we're seeing another divergence, right? We're seeing another divergence, but now you're seeing this divergence on the lower time frame on the M15. The question is, do you see on the 1 hour time frame as well? We're gonna go ahead and go on the 1 hour time frame, and on the 1 hour time frame, not as much. We do see market kind of stalling right here, but it really is not oversold. So since it is not overbought, I'm not gonna really look into it on the 1 minute on the 1 hour time frame. When I say I'm not going to look into it on the 1 hour time frame, that means that I'm not going to go ahead and look for a trade that would last the same period of time that it would last on the 1 hour time frame. So what I can go ahead and do, I go to the 15-minute time frame and I start identifying what happens in here. I typically like to see at least 3 runs where you can see 1, 2, and then we see our third run. And then this one right here is typically going to be the test before it starts dropping. Okay, this would be something I would like to see. But again, I'm not going to go ahead and look too much in depth with this one because it is only on the 15-minute time frame. But one thing I do like is the fact that it came back into that zone or in the past. Okay, so this could be a good area to take opportunities. But yet again, today is Sunday. Sunday market opens today, later on. And we are going to be looking into what can potentially happen. Now, I typically don't trade Sundays, Mondays. I trade until Tuesday, Wednesday, and Thursdays. And those Tuesday, Wednesday, and Thursdays, those trades I sent out can give me, you guys have seen it, up to 31% gain in, just those 3 days, even more on, typically about a 5% gain within the week. And that's more than enough. One thing I want you guys to understand that risk reward is everything, guys. As you guys can see, these risk rewards are great phenomenal trades, which are 3-to-1s, 5-to-1s, and so on and so on. Let me know what you guys want to see next. Let me know if you guys want to go ahead and go over some points of interest. Let me know if you guys want to go ahead and look a little bit more in depth as part as any of those strategies that I have talked to you guys, or anything that you guys have seen that I've talked about as far as like price action, or any other little detail that you may know that you want me to go ahead and clarify on. So with that said, guys, I appreciate you guys jumping on today's session and today's lesson. If you guys can go ahead and help me out, go ahead and smash that like button and comment what you guys would like me to do the next time. So with that said, guys, hope you guys have a phenomenal day. See you guys to the next one. Bye.